Hi there, welcome to kneppyinvests. Time for another portfolio and technical update. But first, something from Selfwealth that I discovered the other day. You can actually track the performance of your portfolio over time, which I didn't actually realize you can do. And this actually shows you how I performed, not only on a daily, monthly, 3 month, 6 month, 12 month, but also analyze basis since I started investing with Selfwealth. Now, I don't completely only use Selfwealth, also use Superhero, and I also invest through my superannuation fund, which is with Net Wealth. But I think I've mentioned before that I have had analyzed returns of about 18% per year, and this goes back about 10 to 12 years. And this sort of verifies that 15.54% analyzed returns, 10% in the past year. I've also got my target portfolio. So you set up a target portfolio in Superwealth and significantly performing that, particularly over the past 12 months, and analyze significantly outperforming my target portfolio. So maybe my target portfolio should be updated. So, yeah, so very happy with my overall returns. However, I probably would like that to be a little bit higher than 15.54% per year. However, I'm being a little bit picky because I don't think the market would have given an overall return. I want to beat double the market returns, and I don't think the market has given an 8% return over the past 10 years or so. I could be mistaken, but I have a feeling it hasn't because the market has gone sideways in the past 3 years or so. So anyway, if you do have a Selfwealth account, you can do this yourself. Community comparison. All you have to do is click on how you performed in the past. For me, it was 5%. So it must be the past 3 months how you perform. No, top 5%. So whenever you see that top 5% or whatever it is, percentage, or how you're performing in the community, just click on that and you get this nice little comparison. So yeah, for those Superwealth people out there who trade through Superwealth, you can do this. And I'm surprised I did not discover this beforehand. Now to the performance of my portfolios since July 1st, 2023. And this also should show you how I've been performing against benchmarks. The benchmarks I typically use are the STW, which is an ASX 200 accumulation fund. I think that's what they call it. I'm pretty sure accumulation means you add the dividends. In another one of my portfolios, I use the XSO as a benchmark. Maybe I should change that eventually and use accumulation fund as well. So I have also changed the names of these portfolios. So I've changed the names to quality, small cap, and technical. So that should give you an idea of the investing strategy I use in these portfolios. Someone did tell me I should just have one portfolio just using one strategy, but I don't think that is applicable to me. I like using different strategies, and I like to see how these different strategies perform over time. That's the whole point of me doing this. And another thing is there's a lot of fund managers out there who have different portfolios using different strategies. So I'm not the only person doing this. It would be easier if I just had one strategy. And I'd say most experts would say to individual investors, that's what you should do. But yeah, it's just me. I don't stick to what everyone else does. Anyway, on to the first portfolio. And this is the quality portfolio. So this consists and should consist of high quality companies that I want to own for the long term. This is probably the typical sort of strategy that we are taught to use. So only high quality companies, invest throughout the world. So not only on the ASX, but throughout the world. My other two portfolios, I only invest in ASX companies, and I'm comparing myself to the benchmark, which is the STW. And this point in time, quality up 2.6% compared to the benchmark 0.64%. The ultimate aim, as I mentioned, looking at Selfwealth, is to double market returns. And ideally, I like to see 20% return per year. I think 20% is because that's what Warren Buffett has seen, his returns he has seen in Berkshire Hathaway since he started that fund. And if you can get similar returns than Warren Buffett, then you're probably doing a good job as an individual investor. Doesn't mean if I had a fund or was a fund manager, I could get those returns because it's a completely different game. The other thing I've noticed here as I've had a look, my currency gain has gone down a lot the last few weeks, maybe the last month. In fact, a couple of months ago, I wonder if Do we have a currency gain I can look at here? No, you can't. I just want to know the history of the currency gain, because a few months ago, my currency gain was over $2,000. Now I'm in negative. Yeah, currency gain negative, which means, and I don't track this at all, means Australian dollar is going bananas against the American dollar and other currencies. No idea why. Maybe because they expect our interest rates to rise further. And if our interest rates rise further, that means investing in Australia is actually quite attractive to international investors, which makes sense, because if you get more return, say just putting your money in the cash in Australian back, you get more money if we have high interest rates. So currency loss now. So it used to be currency gain, but now it's a currency loss. That hasn't quite affected or negatively affected my performance on my portfolio just yet. But if we continue to see the Australian dollar strengthen, that could have a negative effect on the performance on my portfolio. Capital gain, positive 1.85% compared to the benchmark, negative 1.4%. And the benchmark has a higher dividend than my portfolio. Best performing companies. Should I do this every week? Why not? Pro Medicus. People have told me Pro Medicus, and personally told me Pro Medicus is too expensive, but up 34.5% since the start of the financial year. Then we have Nick Scali, Breville, PWR Holdings, Domino's, JB Hi-Fi. So quite a few retail companies there. That's interesting. Also have Goodman Group, which is a recent purchase. Really good to see that going really well. Worst performing companies: Mineral Resources, Zero, WiseTech, Nanosonics, and ResMed. And internationally, best performing company, which is also the second best performing company in my portfolio, is Adobe, up 25.2%. And the worst performing company in my international holdings is Volkswagen. Yeah, Volkswagen. Anyway, that's okay. It's a long-term hold. So, yeah, I'm happy with this portfolio. Why not? Why not? But not quite as happy as I am with my other two portfolios. And we'll have a look at the small caps. This is using a strategy of buying small cap companies, and a lot of small cap companies, not hoping, because hoping is the wrong word to use. Understanding that probabilistically, a few of these companies will hit it big. And that's the whole reason I use this strategy. And I know some of these companies won't make it. They won't perform, but some of these companies will hit it big. And of course, I'm really happy with the performance of this portfolio, up 11% compared to the benchmark, which is the small ords, which is down 2.1%. I did have a look at the constituents. I think that's what they call it, in the small ords, and it's X100 or something like that. So there are quite a few companies that I probably would not consider small cap in the small ords. My definition of small cap is completely different than the definition most people use. Well, yeah, most people would use. I was listening to Osby's The Core probably the last week or two, and Rudy, he said this company with a market cap above $1 billion is small cap. If a company has a market cap above $1 million, I don't consider that small cap. And I think my definition of small cap is the market is sort of a micro cap. That's the normal definition probably people would use for those companies that I would consider small cap. So maybe this should be called micro cap. I still invest in small cap companies, but some of those small cap companies are in my quality portfolio. Anyway, 11%, beautiful. Now I have adjusted the makeups of these portfolios. I actually moved a couple of companies from my technical portfolio into this portfolio because I want to own those companies for a little bit longer, and I'm not selling those companies based off any technical reason. And one company I did move from the technical to the quality was the remaining shares in ResMed. I bought ResMed shares for the long term, but also going to trade it. But I've decided I'm not going to trade those shares in ResMed because I think ResMed is completely undervalued. Now, to show you what I mean by the whole strategy in regards to this fund is by looking at the best performing companies, significantly outperforming the best performing companies in my quality portfolio. For instance, Findi, which is a really small cap, probably market cap maybe $40 million right now, return of 176.62%. the share price of that company is really volatile right now. Then we have Energy One up 68 or 84.96%. Now, a little bit unfair. I did sell my shares in Energy One when there was a takeover bid. That takeover bid fell through, and I bought back in at a significantly lower price. Ansarada, in fact, I'll show you a chart for Ansarada. I'm not sure why the market is getting excited about Ansarada, up 76%. Visan, 65.4. Ordinate, which does have a market cap approaching $1 billion. And that's a company that I can envisage moving into my high quality or quality portfolio, because that has definitely the potential to become a high quality company on the ASX in the future. That's up 56.5%. Atlas Pearls, a company, went into training halt on Friday, I believe, in regards to pearl auctions. And there is some word on the street, some rumors that they did really well with the auction of pearls. There is potential that share price of that company could go berserk, because still really good value in that company, but a lot of volatility with Atlas Pearls, sort of like a commodity. A lot of things can go wrong farming pearls. So that could be more of a short-term trade, but there's no reason for me to get out of that just yet, up 53.7%. Now we have Crisis Corporation, still on a tear, up 52%. Keep going down the list. So we have to go all the way down to number 10 or so before we have a company that is not above my best performing company in the quality portfolio. So that could be Catapult. I think it's Catapult. We also have Neuran Pharmaceuticals, EZ Life Science. But if we look at the worst performing companies, they are performing worse than worst performing companies in my quality portfolio. Pointera, down 50%. Also have Vitura Health, which is a profitable company, down 40%. Vection Technologies, that was a mistake. I should do a video on Vection Technologies. I did have high expectations for that company, but it seems like the management of Vection Technologies does not care about profit, does not care about operating cash flow or free cash flow. The only thing they care about is increasing revenue, which they are doing, but the market is telling them something. Share price keeps on dropping because they're not showing the market that they can become profitable and become a viable business. Anyway, so overall, you can't be unhappy with the performance of this portfolio compared to the benchmark. And we are talking about less than 6 months of trading. So if you analyze the performance of this portfolio, it's doing really well. And I'm hoping for a 20% gain by the end of the financial year. And hopefully I can continue that moving forward. But it does not quite beat the performance of my third portfolio, which is called Technical. So I use Technicals. This is not a high, you can see the current portfolio value, only $36,000. And this is up 16.5% compared to the benchmark, which is the STW, which is only up 0.6%. I'll just actually show you the holdings I do own right now, which means if you just break it down to only the current holdings, that's still up 9.5%. So at this point in time, only 2 companies on the loss side, Vista Group and the Reject Shop. I am close to selling the Reject Shops, and Vista Group was a mistake, too illiquid. And I am making some rules up, and if I follow the rules that were put in place on January the 1st, I would never have taken a position in Vista Group and put it into this portfolio. I want there to be liquidity. I will prefer bigger companies that I have traded or used this strategy before for big companies, including Fortescue, BlueScope, South 32, and have been very successful using this strategy for those companies. So a lot of these companies are bigger cap companies. Well, a few of them are. James Hardie. Actually, quite a few of these companies, actually, majority of these companies are probably smaller companies, not the really big companies. Step One, up 54%. MA Offshore keeps releasing good news, up 29%. Sevastream, 12.3%. And Dicker Data, 11.5%. Step One is an interesting one. I have thought about taking profits. I want to test the underwear out. So I bought 7 pairs at 40% discount during the Black Friday sales or something like that. They have not arrived yet. So we are talking about 1 week. I got a message from Step One in regards to the delay in my package, the wrong sort of package. And they said they have been overwhelmed with orders and they had to hire more staff. Now, I'm not sure if that's the absolute truth or they're just making excuses. But if it is the truth, possibly step one's business is booming right now. So, question I have: is it booming? Should I take profits now if they're not being absolutely truthful to me? I have no idea. Also, got a massive dividend from step one, a 13.45% dividend. That's nothing to sneeze at. Because the share price has increased significantly from there, dividend yield right now, if you buy step one, would be probably about maybe 6 or 7%. But anyway, some nice dividends coming in. And I can't rule out also reject shop. I've got a nice dividend there, but the capital gain is down 10.3%, which is my sell price. Share price down 10%, sell, not including dividends. Anyway, so I can't be disappointed with how I'm performing in this portfolio. And the main reason I'm really happy with the performance of this portfolio is simply because I'm not an expert at looking at technicals. I am learning quick, and I'm finding what works for me. And at this point in time, what does work for me is really working at this point in time. And I can envisage myself performing even better than what I am doing right now if I continue using the strategy and I have rules in place. I can understand now why technical analysis is attractive to some investors or traders, and maybe technical analysis is for me. It's another reason why I'm doing this, having these three strategies and tracking the performance of these three portfolios, is to understand what is the best strategy for me, what works for me. And I think that's very important as an investor. There are some experts out there who say there is only one strategy all investors should use, and that is the buy and hold strategy. I don't believe that for 1 second. In fact, those experts are doing many investors a disservice by saying that. And the main person I'm looking at in regards to that is Phil Town. So I don't listen to his podcast anymore, because there was one podcast where he said, matter of factly, straight up, there's only one way to invest. The way I invest is the only way to invest. The only way that investing works. It's completely false. Anyway, let's have a look. Now, let's transition to a technical update. Going through 20 companies, focusing first on some indices. And the title of this particular video should be probably Portfolio and Technical Update. And I'll probably call it Gold Breaks Out, because it looks like gold might be breaking out. I'd like to see some confirmation. Anyway, first we'll start at the XJO. Not exciting at all. I don't want to spend too much time on the XJO. There's no trend at all in the XJO. Probably the only trend you might say is maybe a very small downtrend, but no trend in the XJO. XSO has been in a downtrend for a while. We have seen a nice rally in the XSO recently, particularly from the lows towards the end of October, start of November. It's bounced from 2,560 to 2,737. If we keep seeing the XSO rise from here, that would be good news, but you can't say this is the end for the downtrend with the XSO. We need confirmation for that, so I'm not willing to go that far just yet. And maybe this is just a bounce, a dead cat bounce, just a little bit of a pause in the overall correction. But there is some hope. There is some hope for the small ors, and we'll see that hope when we look at the Russell 2000. Before we have a look at the Russell 2000, let's have a look at the NASDAQ. So unlike the XJO, and definitely unlike the XSO, the NASDAQ is in an uptrend. We had this little bit of a correction, a pause in the uptrend for about 2 or 3 months, and the NASDAQ has pulled through the downtrend quite nicely. And the last time the NASDAQ was this high, I have to go to the weekly chart. The last time the NASDAQ was this high was back in late 2021. So we're talking about 2 years ago. Not quite all-time highs for the NASDAQ just yet, but it's getting close. Now on to the Russell 2000, and why may we be a little bit excited, particularly those who invest in small caps on the ASX. Why might we be a little bit excited about Monday? Let's have a look at the Russell 2000. For those who don't know, this is the smallest 2,000 companies on the Russell 3000. The Russell 3000 is like a combination of the NASDAQ and the S&P, sort of like the three biggest companies in those two indices, maybe all there is in those two indices. So this is like a proxy for the small caps. And look what day it had on Friday. So the Russell 2000 has been fairly weak, but the Russell 2000 up 3% on Friday. There could be reasons behind that. One of the reasons might be because I did hear the Fed chair, what's his name again? I totally forget. I was going to say Greenspan. That's not right. He's old. Powell. Apparently Powell did have, there was some comments that Powell did mention in a meeting or something. And one of the reasons why the bond yields fell somewhere here. Bond yields down 2.4%. And maybe the comments he had a really positive effect on small caps. A nice rally in the small cap land, up 2.96%. Dow Jones also is looking really good, much more healthy than it has been, much better than the XJO. In fact, the Dow Jones is at a multi-year high right now. Last time the Dow Jones was this high was back again in late 2021 and almost at an all-time high. I'm assuming it's an all-time high. Yeah, easily an all-time, possibly nearly an all-time high soon for the Dow Jones. I don't follow Dow Jones all that closely because there's not many constituents in the Dow Jones. I think 30 or something like that, maybe really small. So that's all I got for indices. Now we're going to look at commodities. We should probably start with gold. So I'm going to put gold at the top of the list. So look at gold, iron ore, uranium, oil. We'll look at lithium, copper, and coal. Then we'll have a look at Bitcoin and have a look at the bonds as well before we have a look at individual companies on the ASX. But first, gold. Gold possibly breaking out, possibly at all-time, well, maybe not possibly all-time highs. It is at all-time highs. Now, the problem here is for Australian gold companies is even though gold prices are rallying, at the same time, the Australian dollar is strengthening, which means it could be flattening out the effect of gold prices rising. So keep that in mind as well, that gold companies in Australia have two things that can lead them to performing financially quite well, and that is gold prices rising, but also a weak Australian dollar will be very beneficial to gold companies because they sell their gold in American dollars. Anyway, gold has broken out. Why is gold getting above 2060 a really strong signal at 2071.95 right now? So if we go back through time and look at the last 3 years, we can see quite obviously gold has had difficulty getting above this level. There was a beautiful run on gold back in 2020 into 2021. Gold went all the way up to 2060 and then fell off. And that was in, what was that? That was in August 2020. And then gold went for another nice little rally in March 2022. Got to 2060 and then fell back. And then gold, again, got to 2060 back in May 2023. In fact, gold got as high as 2081. But as soon as it got there up to 2081, we saw a lot of selling come in and the gold prices fell back. We have not seen selling coming in just yet, unlike we saw back in May of last year, which might be a good sign moving forward. Doesn't mean we won't see selling in the next few days. So there is potential. This could be a continuation of 2060 being a very strong resistance area for gold, or this could be the breakout we're all waiting for when it comes to gold. Now, what would help gold companies on the ASX again would be weakening in the Australian dollar. Now on to iron ore. And for full disclosure purposes, I own a few gold companies. Producers also own exploring companies, and we have not seen a rally in the explorers. We have seen a bit of a rally in the gold producing companies, and I'll show you 7 gold producing companies on the ASX that I am maybe excited about. In fact, I'm excited about all of them. Well, maybe not all of them, but a lot of gold companies I'm excited about. Also own 2 iron ore companies because iron ore is in an uptrend, and iron ore broke above the old highs we saw back in March and February of this year. And we actually did see a nice little rally in iron ore the last 3 days. So iron ore has gone from about $128 to 132.75. So I'm liking this as because I own a few iron ore companies. So why is iron ore going on a run? Who knows? But it's going on a run. Uranium up to 81.4. We have to look at the weekly for this. Keeps going higher. No end in sight for uranium. I don't own any uranium. I sold the only uranium companies I had way too soon, if you ask me, and I have not got back in. So let's not chat about uranium. Oil. I'm going on a trip in a few days, and I am driving the car, and I want oil prices to go down, although that doesn't really affect the price you pay at the pump. Oil prices or petrol prices just up near me are just now going below $2 because we're just coming out of the top of the cycle. But oil prices, not that exciting. We have seen oil prices come back the last 2 weeks. I'm not excited with oil right now. I don't own any oil companies at this point in time. I own one lithium explorer, and that's it. But look at lithium. Keeps going down. Keeps going down and down and down. This is actually really good news for EVs in the future. This is really good for the electrification of the world. And the reason I say that is I think it was Claude Walker on Baby Giants actually mentioned this. And when he said, I went, oh yeah, that absolutely makes sense. This is really good news. You want lithium prices to be really low. And you want coal prices to be really high, because if coal prices are high, petrol prices are high, lithium prices are low, there's going to be a better transition to EVs, and there's going to be more electrification as well. So lithium prices going down is actually really good. So yeah, and I've had these thoughts in the past, and my thoughts were more along the lines of, if lithium prices remain really high, then electric vehicles don't become viable. They're not viable because the batteries will be too expensive, that sort of thing. Anyway, so lithium keeps dropping. I am becoming interested in lithium again because I'm wondering where the bottom is, and I wouldn't be surprised to see a really good bounce once we realize a bottom, but the bottom is not in just yet. And I am having drawing up devising a hit list of lithium companies that I might want to buy when the rebound happens. If it happens, more than likely it will happen eventually. Copper is looking really interesting, much more interesting. We look at the daily chart for copper. This is starting to look interesting. So 2 reasons why this is interesting. Copper is on a run over the past 3 weeks or so, or maybe longer than that, say month and a half. Beautiful run off the lows we have seen, which is at 356, now up to 393. The reason this is interesting is because I don't know if you've heard, but there is that saying, copper, or Dr. Copper. Copper is used as a proxy for the state of the economy. And if copper is going on a run, that's a better sign that the market is more confident that the economies around the world won't be suffering over the next few years. So copper on a run. I own one copper company, that's Hillgrove Resources. And that company will be going to production if they're not already in production. That's the main reason I own that company. Other copper companies I'm thinking of, Aries Resources, that's in a downtrend, capital raisings. Sandfire, of course. C29. Is it C29? C29, the company with the Capricorn mine north of C29, doesn't sound right. C29 Metals. Is that the company I'm thinking of? Yeah. Or is it? Or is it E29? Element 29. I can tell you right now because it's in one of my lists of companies. Well, it's not in that list. 29M, 29th metal. Yeah, 29 metals. I eventually got there. That's another copper producing company, and the share price in downtrend. So even though copper has rallied, maybe the disconnection between the share price of this company and copper. So this could be a nice little trade. Anyway, let's go back to the technical analysis or technical update. So we've talked about copper. Coal, coal's boring at the moment. Bitcoin, so it should be similar to gold, you would think. And yeah, Bitcoin looks really nice. There's no reason to be disappointed with Bitcoin right now for those Bitcoin holders. This is a nice looking chart and keeps going higher. Now onto the yields. So I already mentioned that the 30-year bond yields have dropped, and I'm wondering if that's because of something Powell said. And the bond yield is at a really interesting level, 4.4%, dropping 2.4%. And it's at the highs we saw back in October of 2022. And that was a resistance level, went through that resistance level back in September. So now it became support. So right now it's at a support level and possibly we'll see a bounce. But bond yields are now dropping, and you'll see a similar sort of a pattern with the Australian 10-year. Not quite as pronounced, but definitely a similar pattern in the 10-year. And we'll see a reverse pattern in the TLT, which is a Treasury bond ETF, a nice bounce. Because again, bond prices and bond yields are inversely related. If bond yields are falling, bond prices are rising. That's why the 10 or 20-year Treasury bond ETF is rising, probably off its lows. So that's all I got for commodities, Bitcoin, bonds. Now onto individual companies. I think I have 20 individual companies. I'm going to try to go through this fairly quickly. So these are just interesting companies, just charts. Interesting companies through the eyes of a chartist or technical analyst. Anyway, first one is Viva Leisure. Personally, I have no interest in this company, but I just want to share ideas with you because the chart does look sort of interesting. Share price of this company was in a downtrend, and looks like the downtrend has come to an end, and possibly share price is trying to move higher. I have no interest in this company, but just because I don't have interest doesn't mean you can't have an interest in Viva Leisure. I just don't have any interest in buying companies that have gyms. I don't think gyms are a very big growth area. Qantas. Okay, I might do a standalone video on Qantas. And this chart doesn't look interesting at all. And the reason I might do a standalone video. In fact, I'm going to do a standalone video on Qantas, and I'll probably title it, "Is Qantas Undervalued?" I have heard this 3 times in the past few weeks. Qantas is so undervalued. Just look at the PE ratio. PE ratio of Qantas is 5.7. Fair enough. But were the financial year 23 earnings higher because of some reasons, underlying reasons? And I can think of a few possible underlying reasons why the Qantas profits may not be sustainable in the future. And if they're not sustainable, for instance, if they halve, that means this company is not cheap right now. And I already know this company needs to do a significant capital expenditure program to get their fleet up to par, maybe not to par, but renew their fleet. And maybe I should wait to the standalone video on Qantas to do this. But I had a look at this company's revenue, margins, and profit. In fact, I haven't put profit on this just yet, net income, over the past 15 years. And the main thing to take away from this, the margins, Qantas margins in the financial year 23 were significantly higher than what this company has seen over the past 15 years. So not sustainable, which means the profit this company had, 1.7 million, was significantly higher than this company has seen the last 15 years. This, or financial year 23, was a one-off. I would not be surprised to see Qantas profit to fall by 50% in financial year 24 as margins pull back, possibly even revenue decreases. I would not be surprised to see the profit of Qantas fall below $1 billion. In fact, if you look at the past 15 years, this company has not seen a profit go above, only once has this company seen a profit go above $1 billion, and that was in 2016. It was only slightly above $1 billion. So just don't look at the PE ratio for this company and think Qantas is dirt cheap. There's more of the story to that. So wait for the standalone video on Qantas. I'm going to do it in the next week or so. Anyway, so really the chart's not looking interesting, really. I lied. I said these charts are looking interesting, and this chart's not looking interesting at all. Company called with the ticker code PYC, called PYC Therapeutics. I have no idea what this company does, but look at the chart. Look at this run. Look at that share price appreciation in the last few days. 17%. You're right. 17%. Oh, gee, come on. 17%. Oh, I'm looking at the wrong thing. 17%, 9%, 5% in 3 consecutive days. Really big volume coming in as well. Did this company release any sort of announcement? Let's have a look. PYC, maybe I should have had this in the week that was video. Let's have a look. A response to price query. That's probably why I completely missed this, because the share price is increasing on no news flow at all for the company. They did a new drug for major kidney disease effective in human models back on the 13th of November, which was somewhere in there. Maybe that was a catalyst. But anyway, the market cap of this company is 350 million. Jeez. Does this company have any revenue? No revenue. It's just a research and development company at this point in time. Anyway, interesting chart. Share price of this company has been in a long-term downtrend until now. It looks like it's breaking out. Breaking out, not breaking out. Breaking out. A2B Australia. I'm pretty sure this company used to be called Cab Charge. I'm pretty sure has something to do with taxis and charging taxis. Engages in provision of taxi charge. Yeah. Okay. So they changed the name. This chart looks okay. Trying to get above the old highs we saw a few months ago. Market cap of this company is, let's have a look, $211 million, dividend yield 3%, price earnings ratio 8.1. And last year was the first year they've been profitable in the past 5, which makes sense. This company would have been negatively affected by COVID-19. So let's have a look at the weekly chart just to see where the share price dropped. Yeah, look at that. Well, look at that weekly chart. Oh, gee. Share price of this company was as high as $14 back in 2007. In a well-defined downtrend, this is a long-term downtrend. And if you look at the weekly chart, this is the first time, just based off the weekly chart, the share price has been in an uptrend and for 15 or 16 years. So maybe things are turning around for A2B. Wow, interesting chart, particularly the weekly chart. XRF, I was not going to include any companies I own, but I just had to include XRF because this is a reason why I don't trade for companies I want to own for the medium term. Because if I was trading XRF Scientific, I probably would have taken my profits when the share price had moved into a short-term downtrend. And in fact, I might have sold when the share price got to about $1. And the share price has gone on a beautiful run recently up to $1.21. And would I have bought back in? Well, maybe, but yeah, this is why I don't mind holding these companies, these smaller companies, for a little bit longer and using different rules than my technical analysis or companies within my technical analysis, because I might have sold out of this company just by using those rules, and I might have sold them near the low. So this is definitely a long-term play, hopefully a long-term play for me. Market cap 169 million, dividend yield 2.7. I don't care about the yield. And price earnings ratio 21.7. Really good growth. Look at that revenue growth, if you can see it, over the last few years. Definitely some potential for really good growth over the next 5 years for this company. And there's no reason for me to sell this company just yet, unless the thesis behind why I bought has changed. Another company that I do own, Ansarada, and I have no idea why the share price of this company is going on a run. And definitely the sentiment in this company has changed from negative to positive. Look at that. Definitely a downtrend. This company has to do with, I forget what they call it, but has to do with mergers and acquisitions, making that process easier for companies who are involved in mergers and acquisitions. And right now on the ASX, there's not a lot of mergers. Maybe there's a few mergers and acquisitions, but there's not a lot of IPOs, that sort of thing. So I thought this company would be negatively affected, but they do have positive cash flow. They do release Appendix 4Cs, but the market likes this company right now. And the share price is at a 14-month high. And that's what I'm looking for when I see a break or potential breakout. I'm looking for a long-term high in the share price. When I say long-term, I'm talking about at least a 6 month. I would prefer the breakout and this share price appreciation to be on positive news. So maybe the market is looking at some stuff in regards to this company, their quarterly reports, and seeing some positiveness in there, but I'm just not seeing it just yet. But I am a shareholder of this company. And again, this is more of a long-term hold. Stanmore Resources. So coal is not doing anything yet. Stanmore Resources share price has reached a long-term high, maybe even an all-time high. Why? There must be something different with Stanmore Resources over its peers. When I say peers, I'm using that term loosely because New Hope, Whitehaven Coal, even Yancoal are much bigger companies than Stanmore. I'm pretty sure they're bigger companies. Maybe not. Markup 3.5 billion. So the market is really positive about this company, particularly over those other coal companies, and I just don't know why yet. But you can't look at this chart and say anything else but be positive. This is a nice looking chart for Stanmore Resources. So for those who know a little bit more about this company and why this is a really good chart compared to the other coal companies, so let's have a look at New Hope. Whitehaven. Even more and Yancoal. Yancoal YAN? No, YAL. That's another So why is Stanmore looking so good? I don't know. I don't know anything. I don't know everything. Some might say I don't know anything. Yeah, it could be a valid point. Bell Financial. This is a company I actually do own. Pretty sure. Yeah, this is definitely in my small cap portfolio. The share price moved into a downtrend because the market was really concerned about some regulatory issues with the company, in particular, if I remember correctly, money laundering. And then the ASIC cleared, or whoever was leading that charge, cleared Bell Financial, but the share price did not recover. So this massive decrease in share price was because of those concerns. The share price not recovered, and I would consider Bell Financial Group to be really good value right now. And a chart is starting to look more interesting, possible breakout for Bell Financial. In fact, the share price at $1.13 is the highest the share price has been since August of last year. So we're at a 1-year high or greater than 1-year high for Bell Financial Group. Latitude, I'm pretty sure Latitude is like buy now, pay later and other stuff. Financial service. Maybe I'm thinking of another company. Maybe there's another company I'm thinking of. Bell Financial. Not Bell Financial. What company tried to buy that buy now, pay later? Hum. Which company tried to buy Hum? Was it Liberty or was it another company? In fact, I can tell you right now. Let's have a look. Financials. Go to the bottom. Oh, it was Latitude. It was Latitude. Okay, Latitude. Yeah, Latitude Group tried to buy Hum. So Latitude is the buy now, pay later. A segment of their business is buy now, pay later. I'm pretty sure it'd say it. Yep. No, actually, it doesn't say it. Yeah. Includes Latitude Pay. I think is the buy now, pay later. Liberty, or the one I'm talking about. What's it called again? Let's have a look. Liberty. I don't know anything about this company, but maybe I should do some research because look at this chart. What a downtrend, right? What a downtrend with Liberty. And this is one of the reasons I don't know anything about this company. Share price has been a downtrend for so long. There's no reason, apart from maybe valuations reasons, to do any research on this company until you see signs of the end of the downtrend. And we are seeing signs. So the point of me doing this video is to give you some examples of what I'm looking for in terms of shifts in sentiment, shifts in trend of the share price. And I think there is a possible shift in the trend and the sentiment of Liberty Financial Group, just by looking at this chart and what's happening with the share price. Getting above the highs we saw back in August, and the last time the share price was this high. In fact, what I'm going to do is just draw a line connecting this high with this high and this high. So I'm not saying this is a breakout just yet, but the share price is right on the last two highs. And the share price does break out above $4.20. Again, this is a 1-year high for a company's share price. So I should do some research on this company. Liberty Financial Group, market cap $1.3 billion, dividend yield 8.6%, price to earnings ratio 7.5%. Those numbers look at those numbers with a grain of salt because I don't know how accurate they are. Nice increase in revenue over the past 5 years, and profit flat last few years, but really nice increase on 2020 and 2019. One to put on my research list, Liberty Financial Group. I won't confuse this company with Latitude anymore. Unfortunately, there is another company I own, Catapult. I had to include Catapult because this is a beautiful looking chart. And this is probably the definition of a breakout because the share price is increasing because of some really good results from the company. That's why the share price has taken off. Volume has increased a little bit as well. But unfortunately for this company, they do have new management. And it does look like management turning things around. And you just see the volatility in the share price. But this company has promised so much, has not quite delivered. I do think the market right now is expecting, probably would say the market now has a higher probability of success for this company in the future than it did have not that long ago because of their financial report and because of a better trust in the new management who have been in place for a few years now. So things are looking really good for Catapult Group. And I do like the company. I think if they focus on their core, this company will be significantly bigger in the future. And in fact, I'm not sure if I mentioned this, I do listen to some American sporting podcasts, and I was listening to one, and someone in that podcast, this is an American, and they probably wouldn't even know that Catapult is an Australian company, probably wouldn't even know Catapult is an investable Australian company. They actually mentioned Catapult and how athletes were using Catapult, just a off-mark comment. Not off-mark, just a comment made in just a general chat in an American sporting podcast. So people know what Catapult is because they are leading in this area, and you always want leaders. Another company that I actually have showed in previous videos, maybe once, is Cobram Estate Olives. Who doesn't like olive oil? And I think I included this company in another technical update because it does look like the share price is or has met a bottom. It does look like, just like Latitude, that the end in the share price depreciation, the downtrend in the company's share price is possibly coming to an end. I would declare the downtrend coming to an end in a shift in sentiment if the share price can start moving up on positive news. If this company released a really good trading update, I think you could see a breakout for this company. If the share price gets to, say, $1.50, we are talking about a one-year high, again, with Cobram. Is it Cobram or Cobram? Cobram Estate Olives. Mayne Pharma, a company I've owned in the past. It's been a disastrous story over the past few years. In fact, maybe even longer than that. Yeah, since 2016, share price of this company got to $42. Well, no, there would have been share capitalization or recapitalization. So they would have done decreased amount of shares on issue because the share price did not get up to $42 back in 2016. But look at that chart. From about 2013 to 2016, this is why I held it way back then. It was a beautiful looking chart. And then things did not go well for this company. But maybe things are moving in the right direction. But although looking for the weekly chart, we have seen the share price bounce on occasion. This could be another one of those bounces. So we saw the share price bounce in March 2021, July 2022. So this could be just another one of those bounces. And each time the weekly share price gets into the longer term moving average, we see the share price pull back. But if you look at the daily chart, yeah, look at that acceleration in the share price in the past month. They must have released something positive, I'm thinking, in middle of October, because the share price has just gone on a massive run. And yeah, share price is now at a one-year high. There you go. One-year high for Mayne Pharma. Unlike Lake Resources. Ew. So I said these charts in this part of the video, technical update, are interesting charts. This is only interesting because a few of the lithium companies on the ASX haven't really seen the share price go down all that much compared to lithium prices. So I'm speaking about Pilbara, Alchem, even though share prices of those companies have dropped, not by nearly as much as lithium prices. You have to go to companies like Lake Resources, which is an exploring company. If we look at the chart for Lake Resources, share price of this company went to a high of $2.65 back in April 2022. That probably coincides with the top of the lithium prices. We can confirm that just by going back to lithium chart. No, the top was in December. There was another peak in May 2022. So May and December 2022. So let's go back to Lake Resources. Their share price high was in April 2020. So around the high, the first high in May 2022. And the share price has been falling ever since. In fact, the markup of this company back when the share price reached its high was almost $3 billion. And the reason why I decided to include Lake Resources in this video is because I saw the share price get to 13 cents. I was wondering what the markup was. 179 million. So the valuation of this company has fallen from 3 billion to 179 million. And I have no doubt there would be some investors out there who are really bullish on lithium, who've held this company's shares all the way down from $3 billion markup or $2.45 all the way down to 13 cents. Don't fall in love with mining companies. This is what can happen, particularly if they're exploring mining companies. Even for the bigger mining companies, if the underlying commodity drops like a rock, the share price of those companies will drop like a rock. A great example of that is BHP, everyone's favorite mining company. Probably mentioned this time and time again. Iron ore hit a bottom in 2016. What did BHP's share price do in 2015 and 16? Look at it. It fell like a rock. Well, maybe not like a rock. It fell from $32 to a low of $13. That was a time to get really interested in BHP in early 2016. Although I am a little bit more positive about the future of BHP just because they've done so well over the past 50 or so years. Now on to gold companies. I think I've got 7 here. Yes, 7. Perseus, Catalyst. See if I can remember all these. Perseus, Catalyst, AMI, which is Aurelia, Evolution Mining, West African, which I own for full disclosure, Capricorn Metals, and Ora Banda. So these is not all the gold mining companies. In fact, there's a few other really good-looking charts. So, for instance, there's a few other good-looking charts out there, but I just wanted to include these 3. And the main reason Perseus is because the share price of Perseus is at a 6-month high. And even though the share price or the gold prices are at all-time highs right now, Perseus is definitely not an all-time high. I think the main reason is because of the weaker American dollar or the stronger Australian dollar, which is why some of these companies' share price have not gone on significant runs. You would have seen maybe a significant run if they had. But anyway, a share price of Perseus is moving higher, 6-month high. Last time the share price was this high was back in May. So it's saying a 7-month high, but still. Wouldn't necessarily say this is the best looking chart out of all gold companies, unlike a few others. Red 5 is another one. Beautiful chart. Check out Red 5. Catalysts. I think I included Catalyst because share price of this company has been in long-term downtrend. Why? I don't know. But possibly the long-term downtrend is coming to an end. Look at the massive increase in volume over the last month or so. Massive volume coming in, and the share price is on a run. The share price has increased from 45.5 cents to $1. Share price has doubled. Possibly you've missed out on the rally in the share price. I don't know anything about Catalyst Metals. Markup is $200 million. Do they mind? They've got some revenue. So $63 million of revenue, but loss-making in last financial year. And you would think that it's the lower margin producers, so those companies with a higher AISC, all-in sustaining costs, that would really benefit from a rise in gold prices because what would you call it? How would you define it? So the difference between the costs and gold prices would be a higher percentage as the gold prices go up than those lower all-in sustaining cost producers like Capricorn Metals. So the percentage increase would be much better for these type of companies. I'm not saying Catalyst Metals is a high-cost company, gold-producing company, but I'm just saying maybe they'll get more out of gold prices increasing. Maybe that's why Catalyst Metals share price has gone on a run, and we'll compare to Capricorn Metals. There is a reason why I am showing you Capricorn Metals chart. Is it Capricorn Metals? Capricorn Metals. Aurelia is another one where I think maybe the trend is turning around. So this company's share price has been in a long-term downtrend since the middle of 2022. And just by looking at this chart, possibly turning around. Not absolutely, just possibly at this point in time. I would like confirmation. In fact, I'd like to see the share price get above 12 cents, 10.5 cents right now. If it gets above 12 cents and keeps on rising from there, I think we can confirm that Aurelia Metals is now in an uptrend. Evolution Mining, this chart actually does look pretty good. I would say a lot of gold bugs are putting their money into companies like Evolution Mining because it's probably one of the biggest gold producers on the ASX. Northern Star is another one. And the reason I'm showing you Evolution Mining is because the share price is at a long-term high. So definitely Evolution Mining share price is benefiting from the decrease in gold prices. Last time Evolution Mining share price was this high was back in May of 2022. So we're talking about a 16-month, 18-month, 19-month high in share price for Evolution Mining. This is a nice looking chart as well. West African, I don't know what, this is a really cheap gold play. Main reason is risk, the what do you call it? Political risk, geopolitical risk. This is a mining company in Burkina Faso, but you know, if this company keeps on mining and the government of Burkina Faso doesn't interfere with the mining, this is a really cheap company. And they're also going to be starting a new mine in the next few years. Price earnings ratio 6.7, and the share price is rallying, which is understandable because people see really cheap company and they think, well, if the gold prices are rallying, this company is going to be even more profitable, making them seem even more cheaper. So, yeah, so West African Mining, another nice possible nice looking chart. The problem with West African is last time share price was this high was in July. So we're only talking about 4-month, 5-month high in the share price. I want at least 6-month high. If the share price gets above 94 cents, which is not that far away, we would be at least a 6-month high with West African. Now onto Capricorn Metals, a very low cost producing gold company. I'm not sure if I got my point across clear enough, but high cost producing gold companies are going to benefit more from a rising gold price. And on the flip side, when the gold prices start falling, we see the share price of those companies drop significantly greater or at a greater rate than Capricorn Metals, because Capricorn Metals is a low cost producing gold company. They get gold out of ground at a cost of 1,100 to 1,200 all-in sustaining costs. And the share price of this company is just going sideways. I think this is sort of reason why the share price of this company is doing nothing, because again, other gold producing companies are benefiting more from gold prices rising. And I think the money is moving into those companies, not Capricorn Metals. So I will not be surprised to see a delayed reaction in Capricorn Metals share price. If gold prices keep on going up, eventually you will see this company share price. Did I say that right? If gold prices keep on rising from here, definitely I think you'll see a catch up in Capricorn Metals share price. So I put this onto my watch list. Now onto Orabanda. I'm a little bit more bullish about this company, just what I've heard in regards to management. Now, I won't mention what I heard about the management of this company, but it is bullish, a reason to be bullish. So have a look at the management and their history. That's all I'm going to give away. And I think that's one of the reasons why the share price of this company is on a run. Not profitable in the last financial year. $136 million of revenue, but loss making $44 million. But I think things will turn around, and the market expects things to turn around. Share price broke out in early November when it got above 16, 17 cents. Now it's 24 cents. I was thinking of just taking a trade in this company on that breakout. So a beautiful looking chart. And I think maybe a little bit more too much over exuberance in Orabanda. And maybe this is one of those high costs gold companies that are benefiting from rising gold prices, but a beautiful looking chart. Share price rose 14% on Wednesday, and it's got a sideways sense. So have a look at Orabanda, and that's it for this video. If you have any questions about gold, about these gold companies, don't get upset that I didn't include your particular gold company or your favorite gold company in this particular video. There are a lot of gold companies out there that I do like that I've not included in this list. So for those gold bugs, congratulations. It does look like gold might be breaking out at last. I would prefer some confirmation. There is a possibility that gold could pull back over the next few days, and this is a false breakout. Who knows? We'll have to wait for that. Anyway, if you have any questions, just leave those in the comment section of this video. Otherwise, I am not a financial, what do you call it? If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.